Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at hotspots in the markets for the day today, which is September 15th, Wednesday, September 15th. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I jump into it, we do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything we say as a buy or sell recommendation. We are doing this for your education purposes. So what are we looking at for today? Number one, we are going to talk about this. Last night, the UK came out with their inflation data, and yes,
that was this morning, Todd. 2 a.m. this morning. I know it was last night for some people.
I guess last night for me. All right,
yeah.
This morning,
very
early this morning, the UK is definitely seeing some inflation, and then not only that, we just had Canada release their inflation number, and they are also seeing that inflation rate creep up.
All transitory, Todd. It's all transitory.
It's all transitory. So it's clear that it's being broadcast. Inflation is here. It's creeping up globally. The central banks all know it. Everyone sees it. I think they just don't want to yell fire in a very crowded theater. I think they're broadcasting that, yes, tapering is going to happen this year, and that means they're going to start taking back some of their support, and we'll, in all likelihood, see interest rates start to rise next year. So we are going to talk about that. And it's interesting enough. And then we're also going to talk about, by the way, we got the oil inventories coming up later this morning. So we definitely want to prepare for that number. The interesting thing with this inflation is before these reports came out, we saw gold do a big run up. I don't know if this was buy the rumor, then sell the news. But then since then, as the UK announced their inflation, and as Canada announced its inflation, we did see a brief pop in gold when the Canadian numbers came out, only to continue this little downtrend. But let's talk about, and I know, Brian, you've got some ideas on what's going on with gold, but let's take a look at gold because it is moving around, and then let's jump over to the energy markets to get everyone ready for the oil inventory today, because we got oil up, and then I think we need to talk about your sob story.
Getting worse. It's getting worse.
Getting worse.
I'm going to cry.
We're going to talk about
first time ever on a Nadex broadcast. There will be tears. We're getting close. We're getting really close. All right, let me switch it to me first. There we go. All right, so first story before we dive into anything else. We need to actually talk about last night, not Todd's last night. Last night I mentioned to you guys that the Chinese number was going to be extremely important. Okay, it's a retail sales number. Retail sales is one of the top 3 biggest kind of important events that exists. The forecast was 6.9, and now everybody questions Chinese data. Typically, they question it to the benefit of China. The actual data result came in as a 2.5% increase year over year versus a 6.9. The previous was 8.5. This is an absolute huge number on a yearly basis, talking about how far down we are right now. And again, I mentioned that there are 2 sides of this coin. Part of it is what's happening inside of China with retail sales, but part of it is export. They're an export nation, people buying from them. So, there's a lot here to that. Now, is this changing the way that business is happening going forward? Again, a lot of things are shifting to services. Retail sales numbers need to adjust because of the changes. This is a big deal on a global basis. Okay. Now, again, it's not United States being this far off, but China in general has always been the big leader. It's like, oh, we're seeing it's a bad year. We're only going to grow 13% this year. Seeing retail sales miss by this much is a big deal, and that kind of put up kind of a little crimp on the market. You can see in the overnight, the pound is the biggest mover, followed by the dollar CAD. And again, part of the dollar strength that you're kind of seeing over here in the CAD, as well as the euro and the dollar, is coming from this Chinese weakness, okay? Because again, it is the battle of 2 giants at this point. Rolling a few hours forward into the morning, we started with CPI. Now, CPI year over year for the pound came in higher than expected by a decent amount, 3.2%. Now, you would look at that and say, oh my God, the pound yen is probably like up 800 points today. It's actually down 161 since the open today. It has reversed a little bit. Now, some of the data inside of here, and I was kind of doing a little bit more research in there. Everybody expected this to be higher, and this is one of those cases. I mean, when you have that big of a jump, you're like, yeah, it's going to be big. Remember, it's not so much about kind of what the expectation is, but does it fall in line? Yeah, 3.2 is higher than 2.9. Everybody expected it big. This is just the poll. And again, remember the actual number, when you look at where the poll came from, this is, it's coming from, a bunch of different surveys. It doesn't mean the surveys are necessarily right. Everybody has somewhat of a biased opinion. When you dive into the actual numbers itself, Daily FX actually did a great job in kind of, I think, summarizing why we're not seeing the opposite reaction from this. When it talks about it, it says, more members of the Bank of England's monetary policy are likely to turn hawkish, potentially bringing them closer to the day where they start tightening. Now the formula is set, but the bread hasn't risen yet, okay? It's there. If you dive into kind of this article on CNBC, they said everybody expected this, and here's why. And again, they did use the temporary change, the transitory. But again, right. in UK English, they don't say transitory. That's not a word that they use. But it says the Office of National Statistics, which published the data, noted that the surge was likely to be a temporary change, well, transitory, and said the UK government's Eat Out to Help Out program last year may have extenuated the jump. In August 2020, many prices in restaurants and cafes were discounted because of this. So basically, they had a fire sale last year in August to jumpstart and kind of keep the economy rolling. What they did. So it was one of those things. Although the number is big, you got to kind of understand the backstory to it. The reason why it was so big is because they did do this fire sale. Everything was cheap.
Right.
So that's what kind of made this such a big number, and that's why it was very hard to get on there. Now,
and they're looking at the numbers, and I do appreciate that they're comparing. I mean, it's not just a rate increase. Oh, look, 4%, and then they are looking at what's going in behind the number.
So, well, and again, this was the biggest increase since they've been recording it. So it is something. It is important, but remember, just because we're seeing it, the common trend around the world is, again, quote, the transitory nature of all this. That all this stuff is going to. This is not real. This is not real. Now, what we pay on a daily basis, it's real when you and I have to buy something. In the UK, when they buy something, it's real. I don't care if it's going away. If you need to eat now, you're paying the increased prices on everything right now.
Natural gas right now.
I have 20. I think I'm at like 18%. I may just take it down and be like, I don't know what happened. And if the guy tries to charge me the pressure, to do the pressure test, this is what happens. I go to zero, and they're like, "Oh, we have to pressure test it to make sure it's not a leak." And I'm gonna be like, "It's not a leak. It's because you told me that it's going to go down in the future.
It was going to go down, and it went up by.
I was like, 200%. So, I think it's more than that at this point. But so the CPI is important. But here's where the recipe is really, really important. And again, I'm going to go back to the analogy for bread. Everybody knows tightening is coming. The United States has mentioned it. We said our last bad number may have pushed it a little bit, but once we start, we got to go hard and fast. So anybody that said they paused, they're all on tapering. The EU has said we're not cutting our tapering yet. We're not going to start tapering yet, but we're changing what we're supporting.
Yes.
And they've put a deadline of 3 months. After 3 months, they expect this thing to go fast and furious. The pound now has seen, inflation go much, much higher, biggest of all record. They are also set, right? Because remember, when you start to raise interest rates, it does hurt your stock market. It does hurt companies, and it does really kind of crimp growth. Everybody, eventually you have to do it, but nobody wants to do that first. So it's kind of like a battle, but everything is lining up for the end of the year to be an absolute explosion of raising interest rates across the board. So it's kind of one of those things.
Let's jump in and see what it means for some of these charts.
Yeah. I mean,
the pound, silver, by the way, silver, gold, by the way, is getting, as we talk, everyone's now just
pushing down again. Yep. Yeah. And it's kind of the same thing. Inflation's there, but every single time they're like, this doesn't matter. It's going to go away. It's going to go away. It's going to go away. The market has to look at that and be like, okay, gold is one of those tools when inflation is here and you're using it as a hedge for wealth. It works great, but they keep every single person is giving us the same story, right? That this inflation is just temporary. It's going to go away. But the reality is it going to go away, or is it just going to stop going higher? I think is really where the market is kind of missing this whole boat with everything. So, I mean, seeing gold down 0.5%, almost 0.5%. Silver is kind of doing the same thing as well. And again, magically, what is it doing? It's still flirting with that 1800. It was up to 1806, and now it's down to 1796. So again, it's really kind of jumping back and forth again. Will we be able to break this trend of the 1800? There's always these things out there where people are like, hey, is it going to hit 1800 first or is it going to hit 1600 first? And really, it's not doing anything. It's just literally going in the same thing. So 1800 is a magical number.
And it just keeps
because we've seen it across the board. I mean, uneducated people are going to look at this and be like, "Oh my God, they're all up, and we got to be buying gold." And that's what's happening is they keep putting it there, keep putting it there. It's almost like the opposite of a bubble, if that makes sense. Everything is so good, people are like, "I just need to get into this. I don't want to miss this one," right? And that's what keeps sending it back down again. Because of everybody's inability to take action, that's why we're not seeing it, kind of move, right?
Talk about it, but they're not doing anything yet. When they start doing stuff, and by the way, I mean this action this morning around the Canadian inflation numbers. I mean, this was, again, they ran gold up yesterday, waiting for the UK numbers, expecting inflation to be higher, knowing the Canadian numbers were going to come out, expecting inflation to be higher. They actually got inflation higher, and since these numbers, I mean, gold's done nothing but sell off. You got that immediate, quick little pop when the Canadian number came out, and nothing but sellers as people are just profit taking from this run up yesterday. Like, hey, I'm going to buy this knowing these numbers are going to be like that, and then when they come in, I'm going to liquidate my position.
And Todd, what you just said is also a great point that a lot of people hopefully get. That you said the run up yesterday. Remember, this is something that we see in oil a lot of times too. The day before the oil inventory report comes out, it moves in the direction of what the oil report would have been, right? If it's like positive, price rallies up the day before, and you're like, what the heck happened? It's a Tuesday. The report's not till tomorrow. And then the report comes out, you're like, oh, I see. And then you're like, okay, I'm going to jump into this. And then it retraces back to the downside, that the move has already happened in anticipation for the news. So the news event itself is not so much as important as what the perception about the news event is going to be.
Right.
And again, that's why a lot of the times pre-positioning and an early week analysis is so important, because if you've been able to take advantage of this, you could have used some of the longer duration. You can use some of the knockouts that exist out there, right? The knockouts you can take it almost in preparation, and that way you're getting out of the trade with your profit in the analysis that you did anyway, before the trade's even there, just in case there's a surprise to it. So, it doesn't matter what the actual news release is. It's what the market's perception is. Did the market forecast it correctly? And what type of adjustment does it have to do after the fact? Sometimes you see this big number here and you think this is great. It's going to be awesome for the pound. Buy. And now you're like, what the heck is going on? Why is it down?
Everyone else already traded out. Yeah, they're trading out.
They already traded it. The market expected it. And sometimes you'll see this and it goes down, which shows you that the forecast was a little bit jaded. It was the little primate with the darts again, right? And what happened is the market actually expected more, right? They expected a bigger inflation, jump in CPI, and they didn't get it. So it was a disappointment. That's why you're seeing the weakness there. So there's a lot more to it. It's a game, guys. It's like chess. It's moving pieces back and forth and understanding it. That's why I rely on technical analysis to tell me kind of what I see. A lot of times we'll even draw like I'd like price to be here. Todd, switch it back over. Like a great example is
sorry. Oop. There we go.
Yeah, so this is a dollar CAD. We're talking about the pound. You'll see this on charts where I was like, okay, I'd love for it to be up here where news is because I want to get short this position. It didn't make it, but it still goes short. It's because just the experience I have reading into the news and looking at it and kind of seeing where the trends go month over month. Every single chart, it doesn't matter if it's currencies or anything else out there, has somewhat of a heartbeat where it tends to do specific things in specific situations. And it's about mastering what you're going to do. If you're going to be a binary trader, master it. If you're going to be a call spread person, master it. If you're a knockout person, master it. And, a chart is a chart is a chart. They all look the same, but they all do have their own little heartbeats, whether one's fast, one has a little murmur. They're all a little bit different. And a lot of times you see these things repeat again and again and again and again and again. And everyone's looking for this
and that's your opportunity.
Yeah, that's your opportunity. So, again, look at these. These are all important. This is setting up for absolutely monstrous moves as soon as everybody in the world is like, yep, tapering's here. Now we're going to start talking about raising interest rates. The currency market is going to explode. And when it starts to explode and interest rates start happening, all the indices across the world are going to start going down and things are going to start looking grim, even though all it's doing is trying to fight inflation off, right? So that's why it's so important. And again, looking at, things like industrial production, look at this, Empire State Manufacturing. We've seen manufacturing that hasn't been great. It almost doubled what the forecast was. So again, that is one of those positive signs for kind of where we're moving into the future. So again,
let's talk about today, because I know we're running out of time. We've got the oil inventory reports, and we've got oil as a hot spot today, which is absolutely taking off yet again.
Oil's up. And again, there's a couple different reasons why oil's up. Oil's up 1.5% already today. This is actually, we were talking for, I got tired of saying it, but we had the big, the big, little. This is considered a big move, and again, we're at 9 o'clock, and it is still continuing to rally higher. Now, the API number. Remember, the API number is an extremely important figure that comes in. I think I can make this a little bit bigger for you guys. There we go. So you can see right here for API. The forecast was minus 3.9. It came in at minus 5.4. So quite a big difference to the downside. And that was like a fire. It kind of set oil off. We didn't necessarily have the destruction and the disruptions we have from hurricanes. Another one just came through and hit Texas. And I haven't really heard anything. So I'm assuming that nothing happened there. It was either so bad that there's no reports yet, or it kind of went through. So it could be one or the other. But again, that's a big reading. And right now they're saying this is a 3.6 as a down draw. So it's kind of one of those, this was 3.9, came in significantly higher. This is coming at 3.6. And remember, last week was also a big miss on that one, the 5.9 to the minus 1.5. And now all of a sudden we're seeing the complete opposite, like a rubber banding effect in the opposite direction. So, the way we trade oil. Now, one of the things that we talked about is
at 10:30 this morning. So
an hour and a half.
In an hour and a half, right?
Yeah, we're sitting in a zone right now, but is this the thing? Has it rallied all the way up there in anticipation for a big number, only to have it fail and have it come back down again? Remember, a lot of these times when we have a big move, we have an opposite move we go in the opposite direction. It is potentially setting up for that. It's in an area where sellers have stepped in. We haven't seen them step into it yet. Currently, the U.S. traders about to come online. It's been extremely strong oil. The one caveat to this, and this is the one thing about news trading that does get a little bit more complicated, is geopolitical events, things like war. And you may say, war? What are you talking about? North Korea and South Korea are shooting missiles at each other. Well, not at each other yet, but they're just testing,
pounding their chests.
yeah. North Korea launched 2 ballistic missiles, and South Korea did one from a sea-based, ballistic missile silo. I'm not even sure. I didn't look at it. But whenever you start shooting missiles in the air, oil does tend to go higher. Now, if we hear nothing else in the next day, look for a reversal on that one. But the way to play this, and again, if you guys attend next Tuesday in the Education Summit, I'm giving out the strategy on how to trade this with all the rules, the time frames that you need, and plenty of examples that you guys can see. Okay, so I'm not going to go through it again today, but I've talked about it. Drop it down. Look at those smaller time frames. Look for basing. Look for a price stalling, right? Stalling or freezing, and then again, look for reversal pre-market news. So just because we're straight up now, I would say it's probably set up for some type of a reversal today, because this is such a big move. We're talking about really since since oil market closed yesterday, we're up $1.80 already, and that's with it pushing down yesterday. So, and again, remember, big pushes down, we tend to push up big. We've had a big push up big, even in the after hours. We still had big movement again. That was the API news. So,
and then be ready for that. Yeah, be ready for that report in an hour and a half when that number gets released.
Yeah.
Hey, the last thing I think we want to talk about.
You want to rub it in, don't you? Yeah. Here we go, guys. 3.7%.
Well, there is a saying. There is a saying in trading.
My chart's not even big enough to point. That should show how far it is.
Is things will go up by the steps. All right, and you can actually watch Nat Gas just keep it literally looks like almost like steps. But when this goes down, when things go down, they go down using the elevator. So I mean, Nat Gas keeps stepping higher, but tread lightly, because when it does eventually finally turn, it will be wicked. It will be wicked. Yeah, I don't know if you've got any anything you wanted to talk about in Nat Gas.
Just tears.
Look at this. Holy
Just tears.
cow.
Yeah. So here's where, and again, if you guys are following the saga, in the beginning of the year, the guy told me, "Hey, listen, it's expensive now, so maybe it was at the $3 mark. Maybe if I don't think I peaked it exactly on February 15th. I believe it was a little bit sooner than that." And I mean, here's a daily chart, guys. I mean, we talk about bubbles. Look how fast the ascent is in this thing, straight up in the air. Right? That's the beginning of the year. Look at this. Right? This is an entire year before that. this is what we got here. And it's still continuing to rise. And again, there's no shortage of natural gas whatsoever. So, the question is, does the oil market know something? Is the Farmer's Almanac right? Is this going to be the blizzard of blizzard years? Where's that little gopher? Let's find out what the prognosticator or whatever that thing is.
I didn't see
right?
that.
The prognosticator or prognosticators or something.
Farmer's Almanac is...
Yeah. Somebody get me the Farmer's Almanac. Are we in for it? Do I need to get another SUV with four-wheel drive? Is this the year that the Ice Age is coming back? Because natural gas is telling me yes. So, yeah, I'm looking for the top. Right. If anybody knows where the top is and can call somebody, please let me know. 550 is what we're flirting with right now.
Crazy.
So, all right, again, the oil inventory or the inventory for this is tomorrow. So let's hope this is a run up for a collapse.
And we will be talking about that tomorrow. No, I'm sorry. I beg your pardon. Tomorrow, Brian and I will not be going on in the morning, but do look at natural gas because there is the nat gas numbers. We will tomorrow. Tomorrow we will not be on. We will be back on Friday, so that's really important. Brian and I are not on tomorrow morning. Now, tomorrow evening, I did drop into the chat. Tomorrow evening there is a crash course, a little education session at Nadex on trading volatility. I dropped that in. If you wanted to register for that, you can. It's an evening class. If you wanted to join that, sign up for it. You can always catch the recording. But if you'd like, I dropped that in there. And then I also dropped in for next Tuesday. You want to catch Brian next Tuesday at our boot camp. And our boot camp's going to be about trading commodities, specifically these energies and these metals and opportunities there. If you want to catch Brian's session, remember, there's something special that's going to be offered, but you have to be there in order to take advantage of it. So register for that and be sure to catch Brian's session next Tuesday. Any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can email him at support@keeptradingsimple.com. Again, there is no morning analysis tomorrow morning. We will be back on Friday. Heads up tomorrow for the nat gas inventory reports. We've got oil inventory in just a little less than an hour and a half today. Tomorrow night is the crash course on volatility. Tuesday, we've got the boot camp on commodities. And with that, I want to thank everyone for joining us. Want to wish everyone good luck in the markets, and hopefully we'll catch you tomorrow evening at the volatility session. Otherwise, we'll catch you Friday morning. Thanks, everyone.